Good afternoon and welcome out to today's advisory report. It is Friday, August 14th, 2026. Our gauges remain green. We are in a favorable market condition. The intermediate trend and the short-term trend remain bullish. We are currently playing offense. As you can see, we are 97% in our aggressive portfolios, ultra aggressive. And in moderate aggressive, we are almost right to the max. 79.8 is our current target, typically with a max target of 80%. And our moderate, our typical max target, 60% offense. We're about 61.2. The strategies appear to be working well. Let's go ahead and jump on over to the charts. We'll first take a look at the intermediate chart. This is the SP 500 price compared to this orange line, which is the 30-week moving average. You can see we are wonderfully above after a couple month consolidation. I've been talking about this for a few weeks, dripping into a few months. So this might be sounding like a broken record, but this is the exact action we like to see on the intermediate trend. We are going to be bullish bias when we're above the 30-week. The stats say that we should. 56% win rate, meaning 56% of the days are up days when the market's above the 30-week moving average. So we want to be positioned to take advantage of those up days. Let's go ahead and take a look at the short-term trend. We are looking at the daily chart. Each one of these markings here, and here, we call that a candle. You can see here's that 2-month-long consolidation that we were just talking about. And then price rips up in 3 days, makes another consolidation. Yesterday, we noted that the S&P peaked above and out of that range. Today, I would feel confident in saying we held above the range, even though today was a little bit of a down day. Still constructive, still looks good. Nothing to fear as of right now in the market. Of course, the weekend and Monday could possibly be different stories. Let's go ahead and look at some of the individual positions that we have inside of our ultra aggressive account. We are now looking at CrowdStrike. CrowdStrike down 3.8%. We've been holding it since about this point in time. So good gains on CrowdStrike. WDC, we took a small 2% position going into earnings. We got hit with the gap down, stuck with the position, and moved out of a triple inside day consolidation. We added to it, and now we look like we made the right decision after holding on that gap down. WDC is coming back, looking to see it possibly start hitting resistance around this area or this area. And if it starts to fail, we will most likely back out of it if it comes back down to this spot. HPE looking beautiful, a nice cup with handle. We acquired this coming out of the Head and Shoulders, and it's been up nicely, and we predicted that probably start developing the cup with the handle. Wouldn't be surprised if we get a couple more days of pullback here, and then we'll see if it wants to turn back up. This is a pretty good run for about 2 weeks. Let's go ahead and look at SMH. One of the positions that we took on this week looks like it wants to go. Just finding some resistance at the 50-day moving average. We'll see if we can pop above that and then maybe try to get into new highs. Amazon, of course, the one that we've been talking about, disappointing, coming very close to getting kicked out of the portfolio. We have a bunch of winners. This one might be the loser. Looking to see if it can gain support maybe around the 20-day. If it fails that, we're probably going to have to let it go. That's what I got for you. Oh, let's look at MU really quick. I think can't remember if we talked about this one. MU, a nice cupping pattern. I would say a head, shoulder, shoulder. Now above the 50-day, looking really good. Probably some resistance around this level right here, as this was the previous high. But if we can get above that, maybe going to new highs in this one also. We'll see how it works. Okay, that's what I got for you today. Take care. Have a wonderful weekend. We'll be right back at it on Monday.